Hello everyone and welcome to the Ticker.com's news channel on YouTube. On this channel, we review stock markets and discuss financial news, market trends, and economic data from Wall Street to Global Street. So let's dive in. We begin our review of global economy with the key releases in the US, Europe, China, India, and Japan. Stock market indices plunged around the world as investors reassessed the US interest rate outlook. US retail sales in March rose 4% and accelerated for the third month in a row, indicating resilient consumer spending and economic conditions, supporting the case for the Fed to delay rate cuts. Moreover, a drumbeat of comments from several policymakers suggested that the Federal Reserve is likely to cut rates less than previously estimated and delay the start of the possible rate cut to the fourth quarter. Market indices in New York and Europe extended losses to the third week in a row, and Asian markets fell sharply. Existing home sales in the U.S. edged lower in March despite a rise in available homes for sale, but higher mortgage rates and median home prices kept buyers away. In Europe, Germany's producer price inflation extended its decline to the ninth month in a row, mainly because of weak energy prices. New passenger car registration in the European Union decreased 5.2% from a year ago in March to 1 million vehicles. The annual pace of passenger car registration declined for the first time in 3 months on weak demand in all four leading markets in the Union, including Spain, France, Germany, and Italy. China's gross domestic product figure in the first quarter surpassed expectations, but retail sales and industrial production data fell short of market expectations. Gross domestic product in the first quarter rose 5.3%, following the 5.2% increase in the fourth quarter of last year. The steady rebound in the service sector and rising exports boosted economic growth in the first quarter. Despite the rebound in service sector, economists are worried that the China's economic growth is likely to lag behind the government's target rate of 5% increase in 2024. China's retail sales, industrial production, and property prices showed an uneven and fragile economic recovery in the first quarter. Retail sales rose less than expected 3.1%, and industrial production advanced 4.5% in March from a year ago, respectively. In other economic news, Japan's exports rose at a slower pace, but international trade balance swung to a surplus in March, and consumer price inflation eased in the month. The current account surplus in the Eurozone expanded, reflecting a surge in international goods trade surplus. India's inflation eased but stayed near the upper end of the Reserve Bank of India's target range due to persistent food price inflation. Let us review the key events in global bonds, currencies, and commodity markets last week. The yield on the 10-year U.S. Treasury traded at a 5-month high of 4.6% after demand for safe haven assets rose following escalating tensions between Iran and Israel. Crude oil price fell to $82.70 in New York and surged to as high as $86 a barrel as the prospect of a wider war in the Middle East stoked fears of global supply disruption. Natural gas prices in Europe rose to 31 euros per megawatt hour and advanced 2% in the week due to increased demand in Asia, transmission line problems in Norway, and supply disruptions in the U.S. The euro held steady near a 5-month low of $1.06 as investors projected that the ECB was more likely to lower rates than the U.S. Federal Reserve after comments from several policymakers. The yen weakened to 154.30 against the US dollar on the worry that the Bank of Japan may take longer than expected to raise rates, widening the rate gap with the US Treasury notes. Let us shift our attention to major stock markets in the U.S., Europe, and Asia. The S&P 500 and the S&P 500 index and the Nasdaq Composite extended weekly losses after investors delayed rate cut expectations to September, following hotter than expected retail sales data in March. European markets extended losses for the third week in a row on worries of high valuations, mixed earnings, and stubborn inflation. The Nikkei 225 stock average plunged near 5% after sentiment reversed on semiconductor stocks, elevated geopolitical tensions, and persistent weakness in the yen. China indices rose in Shanghai after China's economy expanded at a faster than expected pace in the first quarter, but the indices in Hong Kong fell on the worry of rates staying higher following the possible delay in the U.S. rate cut. Indian market indices halted a 4-week advance on valuation worries and higher crude oil price stoking inflation. Let us shift our attention to merger deals, market movers, and earnings updates from leading companies last week. Intuitive Surgical, the robotic surgical equipment maker, reported better than expected quarterly results. Netflix, the online streaming service provider, reported better than expected quarterly results and added that it will stop publishing paid subscriber counts starting in 2025. Blackstone, the alternative asset manager, reported better than expected quarterly results and also increased its dividend. Equifax dropped 10% after the credit score company's second quarter outlook fell short of market expectations. Alaska Air Group, the regional airline, said it received $162 million in compensation from Boeing related to Flight 1282 and the Boeing MAX plane grounding ordered by the Federal Aviation Authority. United Airlines, the international carrier, reported stronger than expected first quarter results, supported by sustained travel demand. ASML, the Dutch chip-making equipment maker, reported fewer than expected new orders in the first quarter. United Health Group rose 6.6% after the health insurance company reported first quarter revenue that surpassed market expectations. Bank of America declined 3% after the company reported better than expected quarterly results, driven by an increase in net earnings, net interest income, and investment banking activities. Morgan Stanley increased 3% after the financial services company reported first quarter revenue of $15.1 billion and diluted earnings per share of $2.02. Both measures were ahead of market expectations. Goldman Sachs increased 3.8% after the financial service provider reported better than expected quarterly results. Investors are looking forward to a flood of earnings this week, and tech leaders including Alphabet, Microsoft, Meta, and Amazon are likely to dominate headlines. About 900 companies are expected to release earnings this week, including UPS, Lockheed Martin, Visa, Tesla, Intel, Caterpillar, Boeing, and IBM. Investors will also digest updates on international trade balance and durable goods orders. In Europe, investors will review the latest update on manufacturing surveys released by S&P Global, and the Eurostat is scheduled to release flash consumer sentiment data in the euro area, and the government debt and the budget in the currency union. In Asia, the People's Republic of China is expected to hold 1-year and 5-year interest rates steady, and the Bank of Japan is expected to hold steady interest rates following the hike in the previous meeting. You can review daily U.S. and global financial markets, market news, stock movers, earnings releases, SEC filings, and economic updates on ticker.com and 123jump.com. You can find the latest financial books on Redera.com, keep up with financial industry events on eventsinamerica.com, review ETF and mutual fund performance and in-depth profiles on tickerfunds.com, and review market updates and stock movers in India on niveshak.in. That is all for today, and we will see you